Welcome to another episode of Real Estate Investing Explained. Here's today's question. And so once you found a sponsor to potentially invest with, how are you vetting them? And how do you know that they're someone that's not only trustworthy, but they're also a talented investor?
Yeah, also a great point. This has been a big learning curve. This is kind of the lessons learned section, I guess, of this interview. So the first mistake that I made when I started getting into syndications is I was putting far too much emphasis on a pro forma, projected returns, anticipated what-ifs, maybes down the road, that kind of stuff. And a lot less emphasis on the team behind the scenes, what their track record is, their experience, who's on the team, have they done this before, how heavy is the lift, meaning the business plan, are they just slapping some paint on something, or are they fully gut renovations on all the units? So short answer to that is I look for teams nowadays as my number one criteria, and then I look at the market second, and then I look at the deal third. So it's kind of the opposite of what I used to do. To your point, do you align with these folks? In other words, if you're a value add investor, you believe in fixing things up and creating new value in the property, versus are you into new development and brand new construction and luxury high-end stuff? And everybody's different. Everybody's risk tolerance is different. So it's, again, back to looking inward. What are you all about? And what's your risk tolerance and why and all that kind of stuff. And then finding groups out there that align with that mission. The one that aligned with myself and my wife was Ashcroft Capital, who now I'm part of their investor relations team. Been investing with Ashcroft, Joe Fairless's firm, about 4 years now, in 9 of their deals currently. And the reason was everything that they do was everything that we put on paper that we wanted to look for in a syndication group. And as we found that, we just did deal after deal after deal with them. So it starts with looking inward.
Once you've found the sponsor that you're willing to invest with, do you just continually invest with them multiple times over and over and over? Or are you diversifying your portfolio across multiple sponsors?
Always been a firm believer in diversifying, no matter what we're talking about, right? Have a little bit of exposure everywhere. So I believe in diversification geographically, asset class, different teams, all that kind of stuff. So Ashcroft's just one of the teams that we resonate really well with, that we continue investing for many different reasons. But short answer is we have investments with, I think, 14 different firms in total. So I started with doing one with a team here and one with a team here and one with a team here until I could kind of learn who the key players are and which deals outperformed others. And then I would go back to those overperforming deals and kind of double down and do another deal with them. So I kind of went into hyper diversification mode. Now I'm kind of honing it back into, I got a handful that I really enjoy working with.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.